You closed 40 trades this month. Your win rate looks fine. Your account balance? Exactly where it started. Not down, but not up either. And here's the trap nobody names: you didn't lose 40 times. You broke even 40 times, and breaking even is quietly killing your trading. There's a specific kind of trader who never blows up their account and never grows it either. They're proud they're not losing money. But they've built a machine that's engineered to produce nothing. Let me show you exactly how that machine works. Picture the trade. You do your analysis, you enter, and the price moves in your favor. 15 points of profit. Then 20. You're up. And something shifts in your chest. A tightening. A voice that says, "Don't let this turn into a loss." So you do the responsible sounding thing. You drag your stop loss up to your entry price. Now you're risk-free. You can't lose. And for a moment, that feels like discipline. It feels smart. It feels safe. But watch what you just did. You told the market, "I need this trade to move perfectly, immediately, and never breathe against me, or I'm out at zero." And markets don't move in straight lines. They pull back before they run. 10 minutes later, price wobbles. A normal, healthy retracement. It taps your break-even stop. You're flat. And then, of course, it reverses and runs to your original target without you. You were right. You made nothing. This is the break-even trap. And the cruel part is that it doesn't feel like a mistake. Losing feels like a mistake. Breaking even feels like a save. So you never examine it. You repeat it. 40 times a month. Let's name the real driver, because it isn't strategy. It's fear. Specifically, the fear of giving back a gain. Loss-aversion research shows the pain of losing something we already have is roughly twice as strong as the pleasure of gaining it. And here's the twist: once you're in profit, that unrealized gain already feels like yours. Your brain has moved it from possible to possessed. So watching it shrink even a little triggers the same panic as a genuine loss. You're not protecting profit, you're fleeing pain. That's why you move the stop too early. Not because the setup changed. Not because your plan told you to. But because holding the open profit became emotionally unbearable. You traded your edge for relief. Now think about what this does to your math. Trading is a game of expectancy: your average win times your win rate, minus your average loss times your loss rate. Break-even trading attacks the one variable that actually pays you, the size of your winners. You can be right 60% of the time and still go nowhere if you strangle every winner at +2 while your occasional real losses run to -10. You've inverted the whole point. You're cutting winners short and, eventually, letting losers linger. Because here's the ugly companion to the break-even habit. The same fear that yanks your stop to entry also makes you freeze when a trade goes red. You'll snap a stop to break even in a heartbeat, but you'll hesitate to take a planned loss. Fear of loss cuts both directions. So the profile emerges. Lots of tiny scratches. A handful of real losses. Almost no large wins. On paper it looks like control. In reality it's a slow bleed of opportunity, disguised as safety. Let me give you a concrete number. Say you take 20 trades. Without meddling, your system produces 8 winners averaging 3R, and 12 losers averaging 1R. That's 24 are won, 12 are lost, net positive 12R. A great month. Now add the break-even reflex. 6 of those 8 winners get stopped at 0 before they mature. Your 2 survivors make 3R each, 6R total. Your 12 losers? Still there. You've turned +12 into -6. Same system. Same setups. Destroyed by one habit. And you'll never see it in the moment, because each individual break-even felt correct. The damage only shows up in the aggregate, over dozens of trades, where you can't feel it happening. That's why this trap survives for years. There's a deeper psychology here too. Break-even trading protects your ego, not your account. A loss forces you to admit you were wrong. A scratch lets you say, "At least I didn't lose." You're optimizing for how the trade feels, not for what it earns. Notice the language chronic break-even traders use. I got out safe. I protected my capital. Better than a loss. Every phrase is defensive. None of them describe growth. You cannot build wealth from a purely defensive posture. At some point, you have to let something run. So, how do you break out? First, separate the decision to move a stop from the emotion of being in profit. A stop should move when the market gives you a reason, a new structure level, a higher low, a broken zone. Not when your pulse rises. Second, give the trade room to be right. If your analysis says the target is 10 hour away, a normal pullback of 2 or 3 hour is not a threat. It's the price of admission. Winners are noisy. You have to tolerate the noise to collect the signal. Third, predefine your management before you enter. Write it down. I move to break even only after price closes above this level. When the rule is set in advance, in a calm state, you remove the trembling hand from the equation. Fourth, track your phantom trades. For every position you scratched, note where it actually went. Do this for a month and confront the total. Most break-even traders have never added up the profit they surrendered to fear. The number is usually staggering. And fifth, reframe what safety means. Real safety isn't never taking a loss. Real safety is a positive expectancy repeated over hundreds of trades with controlled risk. A planned loss inside a winning system is not danger. It's the cost of doing profitable business. Here's the reframe that changes everything. Your goal was never to avoid losing. It was to win over time. And not losing and winning are not the same thing. You can spend an entire career perfecting the art of not losing and retire with exactly what you started with. The trader who broke even 40 times wasn't unlucky. He wasn't unskilled. He was scared in a very specific, very common way, and that fear wore the costume of discipline. Once you can see the costume, you can take it off. So look at your last 30 trades honestly. Count the scratches. Ask how many were the market's decision and how many were your nerves. If the answer stings, good. That sting is the first thing in months that's actually moving you forward.